Welcome back to the Wealth Fact. Today we're talking about something you probably heard more recently being talked about, the prediction markets like Polymarket and Kalshi. That's supposedly not gambling because they're trading outcomes like who will win elections, inflation numbers, world events, and whether Taylor Swift will get engaged or if a nuclear weapon will be used in 2026. To understand the prediction markets, we have to go back to the mid 20th century. In Austrian economics, Friedrich Hayek argued that in a complex society, knowledge is dispersed. No single center planner can know everything. No single person, not the president, not the smartest CEO or person alive, knows everything. The farmer might know the soil conditions, the trucker might know the gas prices, and the shopkeeper knows what the customers are buying. Hayek argued that the only mechanism capable of aggregating all these millions of tiny local facts into one usable signal is a price mechanism. And the stock market does it for corporate value. The price of Apple stock isn't just a number, it's a collective best guess of millions of people thinking of Apple's future potential earnings and its possibilities. And this takes us back to the University of Iowa in 1988. They allowed people to buy and sell contracts based on the election outcome using real small amounts of money. If Bush had if Bush won, the shares paid out $1. If he lost, it paid out zero. The results led to the little academic experiment to consistently outperform major polls, and they created the Iowa electronic markets. So it's not that new of an idea. So why is it being talked about more recently? The first being that media isn't really telling us the truth anymore. Most of us don't trust media's predictions anymore, and when it comes to the polls of elections lately, it's gotten even worse. And secondly, technology has played a big role in it. The biggest prediction market in the world right now is Polymarket, which runs on the blockchain. This allows for permissionless global participation without a traditional bank in the middle, holding cash. It's made setting up markets for anything from the halftime performance to geopolitical conflicts, instant and borderless. So what exactly are prediction markets? Instead of buying shares in a company like Apple, you're buying shares of an outcome, and it's a binary contract, meaning it's a yes share and a no share. If the event happens, the yes pays out $1. If it doesn't, the yes share becomes worthless. And the price tells you something. If a yes share is trading at 70 cents, the market is saying there is roughly a 70% chance of this event happening. If the trade is at 20 cents, the market is saying there's only a 20% chance of this happening. The difference between prediction markets and polls is polls ask people what they think, and prediction markets focus on people risking their money on what they think is the most likely outcome to happen in real life. This can be, will Bitcoin hit over $100,000 this year? Who wins elections? What will be the interest rate rise? These markets don't eliminate uncertainty, they tend to measure it. Think of it as a thermometer. A thermometer doesn't control the temperature, it just consistently updates the value. And for most people thinking about this, it sounds like sports betting for nerds. And you're kinda, sorta right. If you put your money on an outcome hoping for a return, that's the definition of gambling. The dopamine hits you from betting on the Super Bowl is the same as your fellow nerds getting hit when betting on the Federal Reserve interest rate cuts. The difference from the casino and the prediction markets is when you play roulette, the odds are fixed by physical and house edges. The casino knows exactly how much they will make over time. It's entertainment with a negative expected return. On the other hand, a prediction market is an actual marketplace like the NASDAQ. You aren't necessarily betting against the house. You're betting against another person who thinks you're wrong for one reason or another. For example, if a contract for GTA 6 coming out in 2026 is trading at 60 cents, meaning there's a 60% chance of it happening, and you buy it, You are buying it from someone who thinks the real probability is lower than 60%. This financial magic isn't betting. The magic is resulting numbers. That 60% isn't someone's bookie guess. It's the equilibrium point of thousands of people putting their money where their best guess is. Gambling consumes wealth for entertainment. Prediction markets gather information as a byproduct of speculation. They're about pricing uncertainty. Is betting on an election a game of chance like slots, which is regulated by individual states, or a financial derivative, a swap, federally regulated by the CFTC? Now, let's talk about the rivalry that's currently tearing the industry. For a long time, these prediction markets were niche because moving money is pretty hard. Traditional banks don't like processing payments for unregulated binary options on geopolitical events. And this is where crypto came in with Polymarket. And they were seen as a global rebel, specifically specifically for the amount of bets you can place on the site. This can be from the Gaza ceasefire, the next pope, or whether a certain AI model would be able to count to 100 without stopping. Because it uses crypto, it doesn't need as much regulation as other industries needed. But in late 2024, the Fed knocked out their doors. The DOJ and FBI investigated them for allowing US users to trade via VPNs. However, Polymarket played their hand pretty well in the last year. They didn't run, they pivoted. They hired high level US lobbyists, acquired licenses for exchanges called QCEX, and and the biggest shock of the industry is that they brought on the president, Donald Trump, on their advisory board. And by this year, they weren't just another crypto site. They are a $9 billion powerhouse that operates as the Bloomberg of the blockchain. And then there's Kalshi. Kalshi is more like the teacher's pet of everything. They did everything the right way. They spent years in the courtrooms fighting the Commodities Future Trading Commission. Their founders, Tark Mansour and Lauren Lopez Lara, argue that these aren't bets, they're economic derivatives. In late 2024, Kalshi won a massive legal battle that legalized election betting in the US. They are now the institutional wall. When you see predictions on CNN or CNBC, it's usually Kalshi data because they are fully regulated. The regulators fear that betting on elections degrades democracy, incentivizing bad actors to manipulate outcomes for profits. The proponents argue that these markets actually protect democracy by providing a clear, unbiased view on what's actually happening rather than relying on other people's narratives to drive views. That led to courts opening up and the markets growing. And what does this mean for you? It's not a new way to get rich. Prediction markets are still a relatively new class of asset. We used to only be able to invest in productive assets such as stocks, bonds, and real estate, but now we can invest in events. This allows you to use your specialized knowledge in meteorology, political, or even your expertise on any Taylor Swift event to be able to monetize it and make some money off of it. And for the past few years, the CFTC tried to ban prediction markets. Their simple argument is that this is gambling. The government regulates gaming, such as casinos and sports betting, at the state level. It regulates investing stocks and futures at the federal level. The CFTC argued that betting on an election is like betting on the Super Bowl. It serves no economic purpose and it degrades the integrity of the election. But in 2023, the judge ruled that because something involves a bet doesn't necessarily mean it's gaming. Farmers bet on harvest, airlines bet on fuel prices. The judge ruled that election contracts allow businesses to hedge against political risk. And as we speak, in February 2026, there's a guerrilla war happening in the courts. States like Nevada, New Jersey, and Connecticut have issued cease and desist orders to the platforms. They argue that states have a monopoly on gambling regulation. If they let people bet on the Super Bowl or an election, you're a sportsbook. And if you haven't paid them their taxes, they're out to get you. However, the platform's response that they're not a sports betting or sportsbook site They're a commodities exchange, which falls under federal law and not state law. This has led to geofencing, where if you're in Vegas right now, you might be blocked from trading on Kalshi sports markets, but you can trade on their federal interest rate markets. It's a fragmented and confusing mess that is currently being handled at the Supreme Court level. Although this doesn't stop Kalshi, as they realize that political junkies trade once every 4 years, but NFL fans trade every Sunday. They processed 9.1 billion in volume last month, but 91% of it was sports. They're trying to become a legal sports book that looks exactly like a financial exchange. And this is how it went mainstream. For years, prediction markets were for nerds and crypto whales. And now, when they integrated with Robinhood in 2025, Robinhood didn't just partner with Kalshi, they effectively became their own prediction market. As when you open up Robinhood today, right next to your Apple stock or Dogecoin, you can see an events contract button. And this changed the psychology of the user. In 2025, Kalshi's volume exploded by over 1,100%, and 90% of that was sports. The industry realized that they wanted to predict the future of democracy as well as predict the future of any sports such as the FIFA World Cup. By turning a prediction into a financial asset, they were able to bypass the stigma of gambling. You aren't betting on the game, you're trading a contract of an outcome of a cultural event. It sounds cleaner, it feels more like investing, but it's just a subtle switch in the language just to hit their $50 billion total nominal value in trading last month. However, the positive of all this is that prediction markets actually beat out most experts. This is because of something called skin in the game filter, coined by Nassim Talbi. This is accounting for if pollsters are wrong, they change their methodology for the next cycle, right? And there's no penalty to it. However, if you're trading in a prediction market, you are financially punished for being wrong. You lose your money, which creates a natural selection of information. Over time, people who are bad at predictions go broke, and those who are good at it start their super forecasting, start gaining more capital as the markets start moving. Like in the 2024 US election, every major network was running 24-hour cycles of this is a really close call. They were looking at polls at a 3.5% margin of error, essentially a coin flip. But if you were looking at the Polymarket prediction, you were seeing a very different reality. The market had a clear 60-40, then a 66-33 split for the month. People called it manipulation. They called it a crypto bro echo chamber. But on election night, the market didn't just get it right. They got it right early. It realized that when people have to put their money on the line, they start to actually do the math and think about it. They didn't manipulate any outcome. They just analyzed the conditions to lead to that outcome and place bets on it. And this leads us to the whales of these prediction markets. In 2026, the average trade size on these platforms have ballooned to $4,800. This isn't just people betting $10 for fun. These are a lot of hedge funds and AI agents. They're using prediction markets for something called pure play hedging. This is essentially, let's say you're a solar panel company. Your entire business depends on a specific government subsidy. You are terrified that the bill in Congress is going to kill your subsidy. In the old days, you just pray to the current president. In 2026, however, you go to Polymarket or Kalshi and you buy 5 million on a yes contract that the bill will be repealed. If the bill is repealed, your business takes a hit, but your yes shares pay out millions. You have essentially insured your business against political risk. And the humans aren't even the fastest players, just like in many of these financial industries. We're seeing a rise in AI trading agents. These large language models connected to high frequency trading APIs scan thousands of news sites, local newspapers, and X threads in real time. If an earthquake hits a semiconductor hub in Taiwan, an AI bot calculates the probability of the supply chain being delayed and predicts that the iPhone launch date will be moved. A contract is automatically created on Kalshi or Polymarket within a few milliseconds. The market prices now move faster than ever as news and everything is being consumed by these bots. And as we wrap up, I want to leave you with a concept that might sound pretty interesting and really not very possible in the real world. It's called futurocracy, proposed by the economist Robin Hanson. Futurocracy is a form of government where we vote on values and bet on beliefs. Imagine a world where politicians don't decide on the best way to lower inflation. Instead, we vote on the goal, lower inflation to 2%. And then we let the market decide the policy. We open a market for, will tax plan lead to 2% inflation? And will the tax plan B lead to 2% inflation? Which policy the prediction market is most likely to work is the one we legally implement. Which sounds pretty ridiculous, but it actually removes a lot of the political arguing and unrest and replaces it with a price. And it's a pretty crazy idea, right? It's something interesting to think about. So back back to prediction markets. They aren't perfect. They can be manipulated by large bettors, and in the short term they can still be irrational, just like every other investor in any other market. But they do offer a feedback loop on events happening in real life that are actually backed by dollars. So when you're downloading these apps and investigating them, you aren't betting against the house. You're betting against the collective intelligence of all other users against you. Thank you for listening.